After what we saw yesterday and now this morning following CoreWeave's earnings, again, we just mentioned mega cap tech, Mag 7, I should say, adding over $500 billion in market cap, and this morning under pressure once again following CoreWeave. Are you starting to get concerned about some of the volatility in the tech trade?
I think it's actually been pretty volatile for a while. I made a call at the end of last year saying that VVIX, which is like volatility of volatility, would be elevated this year, and then we've definitely seen that, where we've seen bouts of volatility and then it comes down. I think the AI trade is certainly still in question. So even though we're past the shutdown, which was definitely causing some slowdown, I think the question of the returns on AI, at least in the near term, is still certainly out there.
All right, I want to get to your word of the day. It's dispersion. What do you mean by this?
I think, one thing I've been thinking a lot about is that we're in this place where there's sort of two economies. You have the Wall Street economy, you have the market, and then you have the rest of the economy. And I think they are diverting. And it reminds me of Europe, actually, post-2008, when you had one currency and one interest rate policy for countries that were feeling very different things. And I feel we're in the same place. So you have this dispersion, not only in what to do and what we're seeing in our overall economy, but also in what you just called out earlier about where we're seeing positive stories, like in some of the cheaper tech names, some of the smaller tech names, pharmaceuticals, and lots of questions around the things that have really been creating a bull market for us this year.
All right, with that, I want to get to your pick. Your pick is in the healthcare space. What's your pick? Why is this a good buy right now?
Neurocrine Biosciences, we hold it in our Robinhood Strategies portfolios. They're a kind of niche pharmaceutical company that's focused on neurological, disorders. It's pretty inexpensive. It only trades at around, I think, 22 times. And we think that they're kind of undervalued. It's a high quality company. Their earnings have been really consistent. And we think some of the appreciation of some of their drugs and then future pipeline, like in Chronicity, are just sort of underappreciated. And we like the micro story versus, it kind of being caught up in some of the macro things that we've seen, because they're very U.S. focused business. All
right. We're looking at the chart of this company. It's about 8% higher year to date. This was a sector that was supposed to benefit from a very friendly administration, from rate cuts. We've gotten both of those things. Why do you think it's still an underperformer?
I actually I don't think we've seen the full breadth of what the current administration will be focused on in the pharmaceutical industry. I think they're only just starting to. I think the One Big Beautiful Bill certainly helps investment here. And so I actually think it's just getting started. I don't think it's sort of fully realized at all.
All right. While we're talking about the administration and the government, we look like we're on track for the government shutdown and potentially maybe in a few days. What parts of the market do you see as being better performers if that does in fact take place? Is there a certain sector that you're bullish on with the idea the government reopens, maybe people have more consumer confidence as well?
Yeah, we have been a little bit more like, there's some areas that we recently added to. Healthcare has certainly been something we added to, but that's not necessarily related to the shutdown. We have recently added to some consumer names, but ones that we think play well in a space that, will still be a little bit under pressure. TJ Maxx is one of them that we hold in our portfolios. We do think that the government can now focus back on other things. And so, Hegseth had a speech the other day getting people to focus on, or I should say, the aerospace and defense industries focus on CapEx, which the One Big Beautiful Bill supports. And so this is another area that I think we'll kind of see focus back on. And then also in the financial sector, that's kind of been just sort of going sideways. And we see that also benefiting now that we can kind of, again, focus back on other aspects. The government, we think, will probably be a little more, or I should say the federal government and the presidency will be a little more focused on some of the other parts of their agenda.
It sounds like you're really talking about not only aerospace, but also defense. I know that's another area that you're looking at. Interesting thought that you're seeing more upside in defense. What's not priced into defense right now? I mean, we know that the U.S. has plans to spend more money. Europe has plans to spend more money, and that's been a big tailwind. What do you think moves it higher?
I think it's just some of the more niche areas. So I'm certainly not saying that, a company like GE Aerospace, for example, can go materially higher because it's had such a big run. But I do think there's going to be a little bit more breadth in the aerospace and defense sector, because I think there's been some smaller companies that haven't necessarily been a focus. I know, there's those things that fly around. I can't think of the word, but
Drones.
Kratos Defense and Security, for example, is a name that will benefit from more drones being out there. That's the word I was looking for earlier. And so I think there's actually still a lot of room to run, because even though some of the top names have been up a lot this year, I think there's in the mid cap space some more value to be had.